Morning guys, and welcome again. This is Blue Pips, and today we'll be talking on Fibonacci. Now, what is Fibonacci? Fibonacci is simply a naturally occurring number, and the number starts from 1. So you have the first Fibonacci number, which is 1. So you have a number 1, which is the first Fibonacci number. You have another number 2, which is the next Fibonacci number. And to have the next Fibonacci number, you take these two numbers, you add these two numbers to get the next Fibonacci number. So the next Fibonacci number will be 2 plus 1, which will give you 3. Then the other one, 3 plus 2, will give you 5. Now you have 5, and 5 plus 2 will give you 8, and that is how 8 continues. So these are what we call Fibonacci numbers. This number occurs naturally on petals of leaf. You have 5, 3, 5, 7. You have 5 fingers. You have almost everything occurs naturally. So that is what we call Fibonacci numbers. Now, if you get these two numbers, you take these two numbers, take this one, and you can have what we call a Fibonacci ratio. And the ratio is simply the division of the previous Fibonacci number from the division between the previous Fibonacci number and the next Fibonacci number. So you have maybe 2 divided by 1, you have a Fibonacci ratio of 2. Then 3 divided by 2, you have a Fibonacci ratio of maybe 1.5. Then you have 5 divided by 3, you have another Fibonacci number. 8 divided by 5, you have a Fibonacci number. So when you do this, you have a series of Fibonacci ratios, and you can plot that on a number line. A number line starts from 0. So you have a line, it starts from this point, it starts with 0, and you have 2. So you start from 0 and you have 2. Now this is the number line. So if the first number will be 2, so you have this 2 here. The next number will be, you have 2. Then the next number you have 1.5, you have this number. Another one, maybe 1 point something, you have this number. So you keep marking, and you discover that this will converge at a point called the 1.615 or the 0.618. So it converges at a point called the 0.618 level, and that is what we call the golden level. So Fibonacci numbers actually has ratios, and those ratios are the 38, the 25, the 38, the 50, the 61.8, and the 78 levels. So the 61.8 is what we call the golden level. Now that is Fibonacci, and that is how you get it. So you can get Fibonacci is divided into 2: extension and retracement. So you have Fibonacci retracement and you have Fibonacci extension. Now what is Fibonacci retracement? Fibonacci retracement is simply used to get where pullback will end, while extension is used to get your target, that is your take profit. Now if you get on this chart, the first thing you need to understand is if you are using Fibonacci, be it retracement or expansion or extension, then you should use it on an uptrend or on a downtrend, that is a trending market. So if you spot a ranging market, I use Fibonacci, it may not work. I say it may not work. So what you do is you spot the kind of market before you use that Fibonacci. Now some people use Fibonacci retracement extension to get this advanced pattern, the bad pattern, the chart pattern, and the rest. I don't really trade that, so they may use it for that, but Fibonacci is mostly used to get where pullback will end. And Fibonacci retracement gives you the pullback, while extension gives you the target. So the first way you get on your chart, you identify which kind of market is it. Is it an uptrend or is it a downtrend? So if you spot an uptrend, then you know you should be looking for, you can use a Fibonacci well. So this is an uptrend, and it constitutes lower highs, higher highs, sorry, and higher low, higher highs, higher low. So it gives you a clear uptrend. So you can use a Fibonacci retracement and expansion here to get the entry and the exit. Now when you identify that it's a downtrend or it's an uptrend, then the next thing you do is you mark the previous low and you draw a Fibonacci. Let's assume this candle from this point, is not there. So if you assume this candle from this point is not there, then how do you get your Fibonacci level? It's simple. This is the low, this is another high, so this move has gone too far and we are expecting pullback. So if you get this low, then get the high, then you mark these two levels. So you mark this level here, mark this level, and you mark another level. This thing I was supposed to even do kind of replay on this. So you mark the two levels. This is a level and this is another level. Now you grab your Fibonacci retracement level, you draw from this level up to this level, then it gives you where the pullback will end. So you can get an entry based on that level. Now you just go grab the level. It's been long, I'm not using it. So this is Fibonacci retracement. Pull it from this point up to this level. I pull it up to this level, then you get the Fibonacci levels. Now you have the 50, you have the 78, you have the 61.8, you have the 50, you have the 38, and you have the 23. These are the four. These are the different levels. You can actually customize this level. You add your own level that you want. Now when you draw this level, then pullback will always end within the 38 and the 61.8 level. This is a 38, this is a 38 level, and this is a 61.8 level. So pullback will always end within this level. Now when it breaks through the 38 level, then you know the next target is the 50 level. When it breaks through the 50 level, the next target is the 61.8 level, and that is the maximum level. When it gets to the 61.8 level, then we are expecting reversal. If it breaks the 61.8 level, then it is reversal. So you trade it as you trade reversal and not the trend continuation. So that is it. Now we mark this level, you see what happens. You see the move, it goes up. So this is Fibonacci retracement. You take it from this point up to this point, then you know where you are supposed to get in, and this is the level that you are supposed to get in. Now let me get another example. If you get this move and the last candle is maybe here, if you have this move like this, now the last candle is here, and you mark the high and the low. So just mark this level. This is indicating kind of pullback, so you get in. This is the high, and you have another low here. So let's get this one. This is a low. Now we mark this level there. Just grab the Fibonacci retracement level. You pull it from this point up to the high, and you pull it up to the high. Then you get the levels. This is the 50 level. This is the 61.8 level. And what do? You wait for the move to get up to that level. So when it goes down, now it goes down. You see it reverse within which level? It reverse on the 50 level. This is the level. So this thing reverse on the 50 level. Now I say pullback will always reverse between the 38 and the 61.8 level. So wait for an entry within that point. And this is the entry. This is a bullish engulfing candle. So it indicates a kind of buy opportunity. And what happened? This thing went up, you see, up, then came back down. Now, so that is how you use a Fibonacci retracement. Then the next one is expansion. So if you have gotten this point, use a Fibonacci retracement to get this level. You mark this level, I know this is the point you are supposed to get in. Now if this is the point you are supposed to get in, let me mark here. This is the point that you are supposed to get in. Then I erase everything here. So you have marked and you have gotten an entry at this point. Now when you get an entry at this point, you can use Fibonacci expansion to get the exit level. That is your take profit. And how do you do it? Fibonacci expansion needs three different points. Retracement needs just 2. Expansion needs 3. So you mark the high, you mark the low, and you mark the entry. So this is the low, this is the high at this point. So you have the high at this point. Then now you mark the entry. This is the entry. So this is where you got in. When you mark the 2 levels, you grab your Fibonacci expansion or extension here. Grab the 2. This is fib-based extension. This one is somehow tricky. Take it from the low. You click, pull it up to the high. You click again, then pull it down to your entry. So pull it down to your entry. You see these are the different levels. You have the 38, you have the 50, or the 0.38, the 0.5, 0.618, and 0.7. Now this level reversal always occur within the 0.618 or the 0.7 level. So it is important for you to backtest, get the pair. Some pairs will actually target will be on the 78 level, while others it will be on the 61.8 level. The typical example is GBP. Is Euro USD. Most often reversal occurs on the 78 level. So You have used this retracement to get this entry. You got in here after this trigger, a bullish engulfing candle. You got in here, and this thing will give you an exit level here. So you hit your take profit. And if you do that, then how many pips are you supposed to make? This is a 1 hour chart. So if you get in maybe at this point, it goes down to this, it goes up to the 78 level. This is 78 level. So you are expecting 110 pips. That is really huge, really huge. So that is how you use it. Get an entry, get an exit. I trade based on that Fibonacci retracement and Fibonacci expansion or extension. This is for a bullish move. For a bearish move is clear, is directly the opposite. Let me just try to get an example. Let me get a good example. I said you must spot the kind of market, know the kind of market, whether it's a downtrend, it's an uptrend, it's a ranging market, before you trade it. If you just get in and you're trading anything, then you trade kind of ranging market using Fibonacci and you lost trade. Now this is a downward move, and since this is a downward move, then you have so many of them. I mean so many of them. Let me take this example here, or let me take this one up. So this is a move. It went down, we tested this point, and it goes down. So if you grab your Fibonacci retracement level from this point down to this level, then grab it from this level down to this level, what are we expecting? We're expecting pullback, and the pullback actually occurred. Now you grab your two Fibonacci based extension or retracement, grab it from this point down to this point, then have the levels. This is the 0.38 and this is the 0.618. So this is the entry. You got a perfect entry here, and you sold down. You can get in here, you mark these two levels again, and you drag, then you get the Fibonacci retracement level. Now for the expansion, you get this level, and this will form your entry. So you have 3 points. This is an entry, they have this level and this level. You grab your Fibonacci expansion or extension tool, take it from this point down to your this, I pull it down to your entry. We pull it down to your entry, you have the 0.78. so this is actually back testing. I see this thing, there was a kind of exhaustion on the 0.78. so this is the exit level. This is the second situation that we're having this powerful move, powerful exit level on the 0.78. so that is it, and that is how we use Fibonacci expansion or extension. Please trade it with caution. Identify the market before you trade. Don't just get in and you start trading without identifying the market. Market structure is so far the gold standard in forex, and you should be able to do that. So that is it. See you again next time. Bye bye.